Alrighty, guys. Week 2 of August in the books. Austin, wherever he is on Earth, I feel like he's the modern day Carmen Sandiego. Wherever he is and whatever he is doing, he is winning. But a very respectable showing for everybody. I'm almost at 8. Kyle is at 7. Other Kyle is positive, which is good.
Are these numbers from yesterday? I think the numbers have changed a bit since then.
Yeah, these numbers are from yesterday.
Yeah, we're at like 5. You're at like 5.3. I'm at 5 flat. Kyle's.
Oh, these numbers are inflated?
Yes, and Kyle's at 3. Unfortunately, there was a bit of a crypto fall off.
Yeah,
I guess between whenever you pulled those numbers and today. I think that technically helped Kyle. I feel like his number increased while ours decreased.
Yeah, it did.
Like whenever
mine was 2 something.
Yeah, so
that's upsetting.
I mean, I don't think anyone's places changed, and we're all positive.
No, we're all still in the green, which is good. I do have to take a second at the start of our show here to brag about my call on commercial metals. Very ESG-friendly recycling metals and hard goods stock. For the month, up over 6%. All time, I'm already pushing 20.
Nice.
So, hashtag not investment advice, but that was a good call. Yeah, everything else, the Ethereum and the Bitcoin rebound has definitely been helpful. Everything else I feel like is trying to crawl back to previous month's highs, but the losses so far this month are not huge. And then my shares of ASML and LVMH, my most recent additions, are holding steady at 4.3 and 4.31 all time. So, not extremely impressive by any stretch of the imagination, but safe and productive. So what's working this week for you guys? I know we already alluded to some volatility in the crypto markets, but what else is going on?
I mean, so crypto's still doing pretty well for me.
Okay.
Like Bitcoin's up 12, Ethereum's up 25 or 26 now. Actually.
Ooh.
Everything else, well, okay, so I mean, everything else is either neutral or red for me, except for, see, Home Depot's up 2.2, Apple's 3.7, and Cognizant is 4.9. So It's actually doing pretty well. Nice. So I mean, yeah, for the most part, not too bad, I guess. The losses are the worst is Callaway again at 6%, but yeah.
Yeah, I feel like you're gonna have to hold that at least through the end of the year before you see anything out of it.
I think so.
But I mean, in the grand scheme of investing, that's essentially no time at all.
Yeah.
So I wouldn't worry about it. Yeah. Month to month, obviously, it's a problem, but
yeah, definitely.
Long term, I think you'll be okay. Kyle, what's working?
Well, I guess besides crypto, Boeing's having a decent month. Microsoft's doing pretty well, I guess.
The blue chips carrying their weight for once. Nice to hear.
And I think Shopify. Shopify was not doing it this month. That was not one that I was paying attention to. But I think most of my gains this month they're not really gains. It's just Ripple is finally rebounding. I think it's gone up back to the point. I think it's 62% on the month technically. But if you actually look at the charts, that's basically where it was back in May. I guess with the all-time high being in March or April, whatever month that was. So I guess it was a big upswing these last 2 weeks, but technically it's just kind of recuperating the free fall that it has been incurring for the last 3 months. So I guess
I gotcha.
So the 5%, 60% this month, 5% total of my portfolio looks good this month, but I guess it's really just offsetting losses that I've already eaten somewhere.
I gotcha. Sometimes that happens. Though, if you are depressed about your performance so far, that brings us to our first story of the night.
Nice.
My favorite, starting with something wild and entertaining. Wish. You all are inevitably familiar with the company Wish.
Mm-hmm.
They are publicly traded, which I did not know.
Okay.
Since the month of January, I'm going to give you a guess as to how far in the red they have gone.
This January?
This January, I will give you a hint. It is very bad.
Man.
Just
You want,
picture all of the Facebook carousel ads of the shitty knockoff products that you can buy on Wish, and let your imagination run wild with what percentage we
So
could
they're not
possibly be
making-
talking about here.
They're not making money. People aren't buying the crap off Wish.
They
It's
are
just
not.
like it's just e-commerce, right? Like I don't.
It's e-commerce. The problem is that there's no quality control in any of the products. Like 99% of what people buy on Wish ends up in a YouTube video titled "Don't buy shit off of Wish."
Yep. Oh boy, percentage.
Yeah.
Percentage
Since
or
January?
Since January, it is very large and it is very red.
Is it triple digits?
Well, triple digits would be 0. So
Yeah.
it can't be triple digits.
we'll say 60%.
Higher.
More than half the company. Oh,
85.
that's not good.
Super
not good.
negative. 85.
71.5.
Oh,
71.5%. That is a free fall. So
Eesh.
what's caused all of this? I mean, everyone knew it was crap.
It's probably
beforehand.
just import, right?
Well, it's disruptions in the supply chain and it's people leaving the app.
Oh.
So
Well,
they're-
yeah, but like, why suddenly now are people leaving the? I mean, like,
because
I
you
know.
can go outside again and you're not stuck inside randomly shopping for bullshit that you don't need.
Yeah, but Wish has been around for longer than a year. Like, it's
They've
not
only
like
been
Wish.
publicly traded for a year, though. They went public back in
Ah.
December, so they've been publicly traded for like 7 or 8 months at this point.
Let me see. Okay, that's what you. Okay, that.
Yeah, so somebody
like, well,
thought it
that's-
was a
that's-
good idea to take this company public.
I mean, they did if they
and
sold
This is what happened.
last year. No, I mean that person might be a genius. They could be a billionaire right now if they sold last year.
I mean, I don't
laughing
think
their
so.
ass off as their. I don't know. You don't have to believe in your company to take it public. You just have to have other people believe in your company.
I mean, don't you kind of have to believe in your own stuff, though?
I mean, legally, yes. Legally, yes, you are probably not allowed to make a company go public, knowing that it's going to tank, hoping to sell off all of your like shares, and then being like, "I'm not responsible for it anymore." Pretty sure there's probably like, I mean, there's like loopholes where you could do that, but I'm sure if you just like said that to someone like a financial regulator, you would get in trouble. So yes, you're right. You should legally believe in the product that you are, or the company that you're starting. But I'm sure it happens where people know.
True. I mean, how is it that it's so obvious to the three of us, and yet they're the ones making millions of dollars, and we're the ones sitting here recording a YouTube show?
Again, I'm not sure. Like to me, it seems like there must be some set of actions that you can take where it must be profitable for you if a company opens publicly, even if you know that the company itself has no hope of actually returning, like, you know, on real investment. Maybe if you're in from the beginning and your company goes public and you just sell, like, you know, like, it doesn't matter if the price tanks, right? If you're out.
No, that's true. It doesn't.
So I guess maybe that's why it's public. To your point, Jordan, if I was on the board of Wish and I wanted long-term to stay with the company and you asked me, do you think it's a good idea for our company to go public, I would probably have said no. You know, so
Well, the better question is, why are you on the board of a company like Wish to begin with?
and why do I? Well, that's what I'm saying. Your question is, why are you on the board and want to stay long term if you know it's a terrible company? And that, to my point, maybe they don't want to stay long term, and the board decided that even if we don't want to stay long term, somehow going public is more profitable, maybe for us.
So
Not
essentially, you're
necessarily
subscribing to the theory that some money made semi-illegitimately is better than no money made semi-illegitimately.
Yeah, I would say that I think there are probably executives in the world that live that way.
I mean, I think there are a lot of them. I mean, why are we on here talking about ESG stuff and why certain companies are really shitty? Like that is the reason we are here.
Yeah, because I mean, I like you said, like 90% of the crap that you buy on Wish ends up in a YouTube video about Wish items. And I mean, honestly, is there a reason to buy off Wish besides that? Like, besides the novelty of buying something, do you know anyone who buys something legitimately, like regularly on Wish?
No.
Because
I
it's a
honestly
good value,
don't think
not
I've
because
ever met
it's-
anybody who's ever bought anything off of Wish.
I've met people who bought stuff off Wish, but like it was for fun. Like, it's almost like a surprise
game.
box. Like, what am I
Yeah.
gonna get? Like, am I gonna get what it looks like in the picture, but it's like really small?
I
Is it
can't
gonna
even
be?
browse.
Is it gonna be
I
even
just want to
related
look at some
what's
of the
in
shit that's
picture?
on here, and it's making me like create an account.
Is it gonna be like kind of what they said, but like for a different mod? Like, if I ordered a Xbox controller, am I gonna get like an Xbox One controller or a 360 controller or the whatever the heck the new one is called? I don't know, S or whatever. It's like, like I feel like that is the appeal of Wish. It's like I know I'm wasting my money. The point isn't to get the product. The point is to buy something on Wish.
It's like lottery.
Yeah. So
Okay,
maybe I get
so
something.
that's
cool.
an interesting point. Is this
So, like-
effectively like a fun form of retail gambling for people?
Maybe. I mean, yeah. Like, people do like retail gambling. Like
Yeah.
surprise boxes. Legitimately are
Mm,
business
true.
that people
True.
do. Like, so I don't think that it's like new, but yeah. For me, Wish, that's like the main appeal of. I mean, like I said, I can't think of a single person who buys something on Wish regularly
I'm
because
actually
they
looking
truly
at.
feel the value there is better. Like, they found some version of the item that they're like, like the branded version is like $1,000. Wish sells this, $5 Chinese knockoff. It breaks, twice as fast, but I don't care because it costs like fractions of a percentage comparatively. Like, I don't. Maybe there's people who do that, but like I don't.
So I'm looking
I don't know.
at 24 of the dumbest items people have found on Wish since our conversation has so inspired me to do so. The first one, and I'm squinting because I'm not entirely sure what I'm looking at is what I think it is. It appears to be a portable urinal for children. Like an accordion style, like you keep it in your purse and it like expands and then you use it.
Why
like,
would you want to keep that? Like, why would you want to put that back in your purse after the child uses it?
I'm not
like,
saying you keep it in your purse. I'm saying size-wise,
No,
it looks like something that could fit in your purse.
But like, why would I want to take that back in my car after my child pees or poops in it? Like, why would I not want to use a plastic bag, which is infinitely more portable than this accordion box, I'm assuming, and like can be tied?
It's very
throw
small. Like, the
away.
portability of it isn't my concern. My concern would be
Is it too small? Like,
no.
what
The
if my-
only the only way this works is if you are somewhere where you can dump it into an actual toilet when you're done using it.
yeah.
Otherwise, there is no point.
That's what I'm saying. Like, why not a bag?
Next, we have a pair of sweatpants entirely covered in Nicolas Cage's face.
Yeah, see, this is what you buy off Wish. Like, this is what I'm saying. Like, it's not to buy... Like, because, like, the problem... Okay, like, let's say you found something cheap on Wish that you might legitimately want to buy, like, for use or, like, regularly. Like, you probably find the same thing on, like, Alibaba or Taobao or whatever, like, other... non-US e-commerce shop. Like, you just go buy it directly from the source instead of from Wish.
Yeah.
Are you ready for this next one, though? Because I don't think you're prepared.
All right.
It is a fully enclosed face mask for a cat. You put it on... Now, the type of mask is...
Does it have, like, whiskers and a nose on it?
Well, so the ears stick out the top, right? But, like, I honestly don't know if it can see through this. Like, you cannot see its eyes, you cannot see its nose, you cannot see its mouth.
You just
Can it see?
Just, maybe
Or is
not.
this some type of, like, medieval torture device? I don't know.
Point
What
is,
I can
this stuff
only
is crap.
assume is something designed to help you make your own gummy worms at home. Like, it's this weird plastic thing full of holes, and this person is, like, squeezing something out of it. Like,
What?
I don't know. A giant bag full of something that is white and fluffy looking. I don't know if that's a pillow or a bag of Coke or something.
like-
in between.
Probably just like packaging fluff or whatever. Yeah, like, this is what I say. It's dumb stuff. It's whatever.
So you're saying that The reason people think Wish can be profitable is because they sell weird novelty tchotchkes.
No, that's not what I said. I just said the only reason you buy stuff.
Yeah,
on
sorry,
Wish.
that's what I meant. I'm sorry.
I never said it was profitable. I was just saying the only reason people go on Wish to buy things is to just buy stupid shit. They're like, you know, what dumb stuff can I find on here? And like you know, like the only reason I'm buying this dumb thing is because I might not even get the dumb thing that it is. Like I like you know, like I could be sent something totally different.
That's fair.
You know, I buy this accordion travel bathroom thing, and maybe they just send me a plastic grocery bag. Maybe that's the joke. Like I don't even know.
Oh my goodness. It's just dumbfounding. That is a publicly traded company. Mind you, obviously down 78% since January is not a distinction that anybody wants, but... Jeez. Okay. Enough about that, but always wildly entertaining to roast the unfortunate market news of the week. I have, since our last game of, I don't know, pick your favorite, or whatever you want to call it. That was fun, so we're going to go back to the well. I found an article this week. Obviously, we've talked a lot about the market being extremely high right now. It's very difficult to find things that are of good value. Obviously, there's concerns with inflation and a bunch of other stuff going on. So, I have a list here of 5 companies that are loved by, quote, the smart money. I don't know who the smart money is, or whether or not they are even smart. But... I have here a list of 5, and I want you to rank if you had to buy one. Favorite to least favorite. So, you ready? First on the list, Activision Blizzard. I know that the gaming community has very strong feelings about Activision Blizzard, and I can see both of your faces right now, so I know that that is true.
It's not just the gaming community. They've had a lot of bad publicity lately.
Okay.
You know, it's kind of like, you know, like, and it's like touching on like, you know, like the you know, like misogyny and, you know, like the heavy anti, you know, heavy frat boy kind of culture that exists in the video game industry.
As an
I feel like that
ESG pick, this is terrible, is what you're telling me.
Yeah, it's not great.
Okay.
That's not a hot pick.
So,
as a moneymaker, I mean, they have that mobile game in China that's making they're owned by Tencent, right? That Chinese company or whatever. So, I mean, like...
I don't know if they are or they aren't.
No, Riot is owned by Tencent.
Yeah. There you go. Yeah. I do know that.
Not. But they do have the Diablo mobile games. So
yes,
making them a bunch of money in China. Immortal or whatever.
Oh, the one that they announced in it, like...
Yeah, and they got a lot of... You see, they got a lot of negative press for that, but it still made them a lot of money. So, like, you know, like... So I'm saying, like, even though they are taking these hits right now where everyone's ripping on them, but...
Don't you guys love mobile games?
Yeah, at the same time, like, they kind of have proven, like, well, people buy our shit anyways. So.
Yeah.
So this is what the, again, quote, smart money says about why they like this pick. Sales grew 19% in the last quarter to $2.3 billion.
Mm-hmm.
Operating margins are at 42%, which is quite high. They do note in the next paragraph, you'll be pleased, one risk is fallout from allegations of sexual misconduct and related lawsuits by the California Department of Fair Employment and Housing. The reason they say the smart money likes it, or the signal, I guess, that they're giving here, director Peter Nolan, I don't know if they mean like movie director Peter Nolan or like stock market director of the company Peter Nolan, just bought $2 million worth, somewhere between $80 and $82 a share.
Wait, so they recommend it because a rich guy bought it? That's the recommendation?
Apparently it's supposed to be a signal of his confidence in the pick, and if he's willing to risk $2 million of his own dollars...
Who is this guy?
Is this the guy of his funds dollars? I don't know.
Is this the guy writing the article? Or
no, Peter Nolan is not the guy writing the article.
Okay, so they're just saying, like, this well-known investor...
he's the chairman of Nolan Capital, apparently.
Okay, so this the chairman of a well-known capital group, you know, venture capital group, I guess, is throwing $2 million at this company, thus you should do that. That's the recommendation.
That is what they're saying the smart money is doing.
Very credible.
The smart money.
Why do you think I keep putting smart in quotes?
I'm just curious. I mean, like I said, I don't know. Like, people buy their stuff anyways, right? Like, WoW continues to sell subscriptions even though people hate it.
Yeah.
Like, so I mean, I don't know. And they supposedly have their new Diablo game coming out. Like, will everyone just forget about all of the crap when that drops? And everyone's like, I just want to buy the new game because Diablo 4 is Diablo 4, and I've been starved off of it for so long. There is that kind of thing too. So I could kind of see how they're like, yeah.
So you could see how there's potential value here, but both of you vocally hate this option.
Not a big fan of it right now.
Okay.
It's probably not the most ESG friendly thing.
That's fair.
Yeah.
Okay. Well, let's move on to your next option then, and we'll see if you like this one any better. This one is Riley Financial, a Los Angeles-based investment bank. They manage money and do stock research. Wait, a financial company manages money?
Wow. Surprising.
Sources are Blizzard and a finance company. Interesting.
They say the reason they like it, revenue grew 26% in the second quarter to over $336 million, and it pays a 2.9% dividend yield.
Well, so they're like, we like this finance institution because they made a lot of money this last year, but
yes,
from what you're telling me, everyone's made a lot of money this last year.
Correct.
That's why the market is so high.
Correct.
And that's actually causing a lot of uncertainty right now. So, like, wouldn't it be a bad idea to invest in investors?
Well, so the reason that they like financial picks in this case, if the books are solid, which I'm assuming they are if they've made it onto this article, access to capital, regardless of what the market is doing, is always a needed product, right? There's never a time where people don't need money. There's never a time where businesses don't need money. Obviously, yes, if you repeat 2008 and you own financial services, you have a very, very large problem. I think they're assuming that that's not going to happen, but obviously, hindsight at one point or another will be 2020, and we'll know for sure. But the reason they call it a smart money pick, the CEO of the company purchased an additional $3.4 million worth of stock.
So the CEO likes his own company. So
yes, which probably shocks nobody. I don't know if
the
CEO of Wish is buying stock of his
about Wish. Like I said, like, I don't know, man. Like, like, if I was a regulator, I would say yes. Every person who owns stock in a company that is about to go public must believe in the company for it to go public. I would say yes.
But I feel like a lot of people, to your point earlier, once it goes public, you just cash out your chips and you leave the table.
Yeah, like, I'm
like,
sure
even the guy, even Adam Newman at WeWork, right? He failed spectacularly. He is still worth more money than God, right? Like, he is worth hundreds of millions of dollars for failing spectacularly at something.
I mean,
it's not to say that WeWork can't turn it around, but my feelings on the topic, if you watched any of our videos, are very well known at this point. So I won't repeat them all. But suffice to say, I have serious questions about the longevity, especially considering the margins. Like, when you own that much real estate, if you can't fill it. Anyway, Reader's Digest version. Bottom line, the CEO of this financial institution likes his company and put a lot of money into it. So that's option number 2. Option number 3, going back to ESG picks that are highly questionable because of a host of all kinds of problems, is Alibaba.
These aren't great options, I'm not gonna lie, but okay.
Are you ready to hear the smart money rationale for why you should be buying some of this?
Sure.
Organic sales growth is strong at 32%.
Okay, that's legitimate.
And the company was signaled out by Albert Meyer of Bastiat Capital,
okay, so
which posted 22% annualized revenue growth over the last 5 years,
so
compared to 17.7 for the S&P 500. So essentially, this company that has beat the S&P for the last 5 years
believes that
thinks that this is a good idea.
I mean, I won't disagree. I think Alibaba's a good buy. It's a
Long
legit.
term, the question is how long are you willing to be patient with it? Because right now, the shit that's going on down, like, if you're trying to make money off of this in 6 months, don't touch it.
I guess
It's
that's
not
fair.
going to happen.
Well, is that what this list is about? I
Well,
thought
no,
this
this is just 5 companies that they think are strong values at their current price and why you should want to buy
okay.
it. So, they think that Alibaba is a good option. Value-wise, it's probably hard to argue since shares are down 40% since October. The next one is a mid-sized pharmaceutical company called Organon. Basically, they were spun off of Merck, and they make drugs. It's cheap because it has its issues of its own. Apparently, a bunch of their intellectual property rights to a bunch of their drugs expire between 2025 and 2027. So essentially, once it becomes common domain and people can make generics, how much money do you lose because generics are usually just as good?
Mm-hmm.
Obviously, neither of you have heard of them, so I'm not going to belabor you with what do you think. But let's get to the smart money signal here, and you can tell me whether or not you buy it, all right?
Well, what drugs do they? Okay, yeah, go ahead.
Apparently, one of their best-selling drugs is a birth control pill called Nexplanon, which I have never heard of. Obviously, none of us are probably very familiar with that, but anyway. The smart money signal, all right? You ready for this? It's recently suggested in a letter from another financial services company that has, and this is a direct quote, has a good record. Its portfolio in the past 12 months is up 135.8%, which is very good. But I think we all know that anybody can get lucky for 12 months. Right? If I can sit in this chair and just randomly buy a bunch of Bitcoin with fake money in the month of February and have that go up 75% in 2.5 months, if you buy the right thing, I feel like anybody could hit 135 in 12. It's a question of luck to a certain degree, right?
That's true.
So, you like this? You don't like this?
I mean, also, I guess pharmaceutical companies, you always hear about them making a lot of money. So I guess I kind of like that. But having a deadline on how much money on like my current,
The patent
revenue sources, that's not great. That means
No, you have to make new ones.
Yeah, I have until 2025 to form some new drug to fill some new problem. I assume they're already doing R&D on something. Is there any public news about that? I guess not, probably, right? That
they didn't include it in this.
Yeah, well, I mean, even if, like, there was something, would you really ever want to talk about that as you're doing R&D?
Right.
Like, I'm sure among pharmaceutical companies, that stuff is protected pretty heavily. You don't want people swiping your plan or whatever, so...
No.
I don't know.
Okay, so again,
working in healthcare, I know that as long as the pharmaceutical company has something to sell, they'll make a ton of money. So in that way, it sounds like a good buy, yes. But I guess I have no idea how popular their birth control drug that you were talking about is selling. I don't know what other drugs they have to sell are. So I'm not really sure. Do they have a history of consistently putting out new stuff, or is it they have 3 things and those are the only 3 things they've ever made?
It says that they regularly launch new products, have $1.3 billion in free cash, and support a dividend yield of 3.3%.
They'll probably stick around and then they'll keep making money. Then
probably, assuming that they navigate that patent cliff. Yeah. All right, option number 5, Chegg.
Chegg? Like the school?
Chegg, yes, the online
like the
bookstore or whatever the hell.
Oh my god.
Okay.
I forgot that even existed.
Well, let me tell you why. I'll give you some points here, and again, you can tell me if you buy it or don't buy it, like it, hate it.
Have they rebranded beyond just having the answers to tests?
Yes. So apparently they do like books and classes and tutoring and shit now. So last year,
Yeah,
student
answers to
subscriptions
tests.
jumped 67% to 6.6 million. Sales grew 30% in the last quarter, and they have 28% sales growth for the year, up to $815 million.
So they probably benefited from all the online school, right?
Oh,
So
they had to have.
Yeah.
does that take a hit once people have to go back?
I mean, the way things are going, I'm starting to question whether or not people are going to go back.
Well, that's true. So I guess you're just okay with keeping it for like a short term and then selling it before people.
Yeah,
go
I mean,
back
I
to
got to
school?
be honest with you. Of the 5 that are on this list, short term, Chegg is probably the winner.
Yeah.
If you're willing to sit on something for a long time, I think it's hard to beat the potential of Alibaba. I mean, the size and the infrastructure is just massive.
That's true.
So that would be like on this list. Those 2 would be the ones that I would be the most excited about. But that's me. Some of these smart money signals seem kind of like bullshit. But
Yeah,
again,
I think
maybe that's just
Alibaba.
me.
Yeah, I think Alibaba is probably the best buy, just because it's a massive international commerce platform that's well established and used by like pretty much every country.
If they don't get split into a million pieces, that's the
Yeah.
caveat. And obviously, they have their own
Well, if they get split into a
allegations
million
of sexual
pieces,
assault and professional misconduct that they have to deal with too. So
yeah, they do. But
they and
they're also,
Activision are in good company, it appears, in that regard.
yep.
Okay. I mean, is that consensus? Do we all like those 2 the most of this list?
I think so. Honestly.
I think so. Yeah.
Okay, cool. So I know that on that list there was a lot of very ESG questionable companies.
Hmm.
So, given that this month we're all doing fairly well and may look to exit some of our positions with some extra cash on hand, this next list is the best ESG stocks in the Dow at the present time, according to the person who wrote this article, Dan Burrows, and MSCI. For those of you that are watching that do not know what MSCI is, essentially they do like global rankings of industries and companies to determine how ESG friendly they are, from really, really terrible to quite good. And that's obviously not the actual rating scale they use, but you get the idea. So, I have 10. I'm not going to bore you with all the particulars this time because a lot of these are very, very recognizable names. But I do, again, if you had to pick one, say if you sold something this month for a massive profit and you needed to spend that money somewhere, which of these 10 are you picking if you're trying to make money by the end of the calendar year? All right, that's the challenge. Your first option is Amex, currently trading at $145.10 a share. Warren Buffett likes it. Blah blah blah. Everybody knows.
Why is that ESG friendly?
I will tell you why.
Credit,
So, American Express, essentially.
Not that I can think of anything that a credit company would do that is like technically ESG negative, but like I guess I don't know.
Dude, all the bills, it's paper, bad for the environment.
So essentially, the reasons that they are highlighted in this article in particular, it says they stand out for scores on corporate governance, human capital development, privacy, data security, and carbon emissions. Areas where it scores average: corporate behavior, to your point; consumer financial protection, also to your point; and also to your point again, access to finance.
Okay.
So they score above a lot of their peers in the industry, but
They're not terrible with your private information.
they are
so
they
that's
are
what
not
makes
without
them not bad.
reproach, is the point.
Yeah.
And again, we've
Okay.
talked about this a million times, right? Just because you can have a good ESG score does not mean you're perfect. It just means that you're better than most. And right now, I would argue that better than most is a hell of a lot better than nothing. So, first choice is Amex. Second choice is Amgen. This is one on here that none of us have probably heard of. Essentially, they are among the 13% of biotech companies that score a AA rating from MSCI, which is very good. Though they are an industry laggard when it comes to product safety and quality, which is kind of concerning when you make drugs.
Yeah, that doesn't sound great.
Average consensus says that it is a buy right now, posting solid adjusted earnings and having a, quote, number of innovative drugs, including biosimilars, that are potentially in development. Bottom line, based on the prompt I just gave you, I don't think either of you are picking that, so we'll move on. Number 3 is Cisco, trading at $51.79. Consensus buy from a lot of people on Wall Street, and scores very highly in the top 5th of the industry. Though nobody gets the highest rating of AAA. Cisco is in the AA category. So they get top marks for human capital development and opportunities in clean tech. They score average for controversial sourcing of materials, supply chain labor standards, and corporate behavior, among other key issues.
Nice.
Very vague.
So they do some things really well, but it sounds like in an industry or in a sector where there are lots of problems, maybe they just have a few less problems than everybody else. But that is your third option. Number 4 is Coca-Cola, currently trading at $54.17. Again, rating of AA. It is a leader among the 53 companies in the beverage industry, as only 15% of them have this rating, though 9% did achieve the highest rating of AAA. So, they're not the best. They're in the second best category. High scores on packaging materials and waste, health and safety, and product carbon footprint. Overall score is dinged by... Does anybody want to give me a guess? Health and nutrition.
Nice.
I'm actually surprised about like the environmental impact and stuff too. I mean, like, even if everyone is recycling all their Coca-Cola, like like the Coca-Cola brand has to generate a lot of carbon emissions. Like even if they're doing a good job.
Well,
yeah.
But I think they've split this up into a couple categories because they do go on to say that it is average by industry standards on metrics like water stress and corporate behavior. So, packaging materials and waste is good. Health and safety of workers is good. Product carbon footprint is good. But health and safety and the actual resources that they potentially use to make the product are where they have problems. But that is your fourth option. Number 5, Kyle, you actually already own this, is the Home Depot.
Nice.
Currently trading, at the time of this writing, $323.96. Again, AA rating. Only 12% of the industry has a score. Honestly, I'm stunned that Home Depot is among them, if I'm being honest with you. But the reason they made the cut in this article: attention to chemical safety, product carbon footprint, and corporate governance. Average marks are for labor relations, raw material sourcing, privacy and data security, and general corporate behavior. But when you make questionable political donations, it's probably what you get.
Nice.
But that is an option. Kyle, gold star for you for already having one.
Nice, thank you.
You may still have this one too, actually. You secretly have a very strong ESG portfolio, whether you know it or not.
Nice.
Honeywell.
I do still have that.
There you go.
True.
At time of writing, $227.33. It scores well against its 35 industry peers, among the top 14%.
Wow.
Okay. Trying to find the reasons that they like it, but they don't really talk about it. Okay, here we go. Stands out amongst its peers for corporate behavior. Average marks for governance and opportunities in clean tech. Lags behind industry peers in labor management. Number 7, IBM, trading at $138.16. Again, AA rating, so we've yet to come across anybody that has received a AAA rating, but I don't know that we're going to. They say that only 19% of the 140 companies in software and services industry have this rating, so they're in the top 19%. It is a leader in data privacy and security and opportunities in clean tech. It's offset by its lagging behind in corporate behavior and human capital development, so perhaps a bit of an old boys club, holding them back. 8, Salesforce, trading at $227.96. Industry laggard in issues of corporate governance have been a problem. Though, in 2019, they did have a AAA rating. They were downgraded in November of last year. Primarily for those reasons, it looks like. Okay. Option number 8, 3M.
3M, like the masks?
3M, like blue tape and stuff like that.
Yeah. And reflective clothes.
Hashtag not a sponsor, but frog tape is way better than blue painter's tape.
Oh, green, right?
Speaking from experience, yes, the green frog tape is much better. Currently trading at $198.30. It is the first of only 2 to currently have received a AAA rating.
Yeah.
Now, that's MSCI thinks this stock is great. Wall Street is a little bit less optimistic. They don't know how much value is here, and they are not sure where you're going to get it from. So, issues as to why they don't score perhaps as well in the eyes of Wall Street. They've pledged to invest $1 billion towards clean water and climate goals. But the uncertainty over some of this and whether or not it actually works, and also the regulatory risks of some of the questionable substances that may be in their products, are the reason why there's some hesitation here. Number 10, most of us owned or still own this at one point in time, is Microsoft. We've talked about it a lot. It has maintained a AAA rating, I did not know this, since 2017.
Yeah.
They do a lot of philanthropy and
yeah, I mean, obviously the green energy and the diversity and all that stuff is very, very well documented. They do obviously have corporate behavior problems, as it seems like pretty much everybody on this list does. But that is your last option. So, if you sell anything in your portfolio and you make a ton of money, which of these 10 are you going for? I'll read them off one more time. You've got American Express, you've got Amgen, you've got Cisco, you have Coca-Cola, you have the Home Depot, you have Honeywell, you've got IBM, you've got Salesforce, you've got 3M, and you've got Microsoft.
Honestly, I don't think any of those are really making you that like. I don't like really any of them, to be honest.
You don't like any of them. Why don't you like any of them?
I mean, okay, Amex is a credit company, I don't just don't really like credit companies. I don't like the average person. I feel like doesn't like credit companies. So why would I want to
No, they
invest
don't.
in them?
I think we can all agree that the invention of a credit score is really stupid and
So I
very
don't know.
problematic.
The second one says a biotech company.
I mean,
Don't know
yeah,
a lot about it, but I
none
mean,
of
I
us
guess
know
that could
anything
be
about it.
cool. So I guess I mean, like I'd have to research it. Third one was Cisco. It says networks, right? I mean, I guess people will always need like networks and telecommunication systems and services. I guess like from an ESG standpoint, I guess I just don't understand how any of these 10 companies are really like actually ESG friendly. I guess that's my problem with it. All of them are just kind of like.
I think it goes to show that there's a million criteria you can consider.
Well,
And
I
it's
think the bar is just
your
so
ability
low.
to make sense of them and what you actually think qualifies and what you think does not is really probably the bigger conversation here.
Yeah.
Because everybody does certain things very well and everybody does certain things really, really poorly. I think it's just a question of what actually resonates with you. In this case, it sounds like nothing.
Yeah, I don't know. None of them from an ESG standpoint really speak to me. I guess if I just need to buy some to make money, Microsoft is going to make money in the next 6 months. Buy that. Home Depot's worked out for Kyle. Just buy that.
Yeah, I mean,
Maybe
I think
Cisco.
there's a couple of clear winners on this list. I'll let Kyle give me his opinion before I tell you what I think they are. But I'm obviously not an expert by any stretch of the imagination either.
I mean, I guess of the two on that list that I own, Home Depot and Honeywell have done really well for me.
Mm-hmm.
So I guess I don't know. I probably wouldn't go back into Home Depot again. Not that it's bad, but
No,
it's,
you already have some.
yeah. I don't know. I feel like Honeywell. Honestly, Honeywell has been consistently good, and like they do a lot of, like they are so, their net of like products and like whatever that they're involved with is so big that like
Yeah, I mean, they work in like aerospace, and they work in like material design, right? For like construction materials and like.
they do
and
so
tech.
much of everything.
Yeah, so I mean, like all the fields they're in are booming right now, right?
Yeah.
So those will continue to boom.
Yeah, so I feel like maybe that one again for me.
Okay. Kyle, I know that you were rather underwhelmed by all of the ESG fluffery on this list, but I do think of all of the ones on here, obviously Microsoft is an easy choice. Most of us have already had that at one point or another. I think the other one is Salesforce, and I'll tell you
Salesforce?
why.
I mean, everyone goes ahead.
I don't necessarily know how strong, like the sum of the parts is, right, in terms of ESG. I usually prefer companies that have a very, very strong collection of a handful of different areas. So on that front, I don't know that I'm that impressed. But if you're talking about something that has been on an absolute tear and something that is poised to take the opportunity that is presented by current market conditions, I think it's Salesforce, right?
Well, I think
sales are online, e-commerce is booming. Like, to me, that seems like an easy choice.
You were talking about like you prefer like companies maybe that have multifaceted sources of income or whatever.
Well,
I think
multifaceted sources of income, multifaceted sources of ESG, which I don't necessarily think they have. But
oh yeah, they don't. Yeah.
But I mean, of this list, I think you'd be hard pressed to make an argument that very many other options.
Yes, Salesforce is massive. Everyone likes. I don't know. Okay, not everyone likes using it. Everyone does use it though.
Yeah.
It's like, Salesforce is an example of what happens when you find a problem, and well, it's actually like you identify a problem. It's not just like you make a product that solves a problem that exists. You identify a problem that no one else knows exists. You develop a product for it. You market it super heavily as the only solution to the product to the problem that you found. Everyone just buys it, and then everyone's stuck with it. Like I think that's why they're so successful right now. It's just like they realized first that people were gonna need a CRM, or the concept of what a CRM was. They figured it out first, And because they effectively sold the idea, everyone who ever needed a CRM was told like Salesforce does that. So you just buy Salesforce. No competition ever appeared. It was like the, like it's like the, it's like the opposite of it. Some companies have the opposite problem where like they make something like that does something really good, but they don't really know what the problem that it solves is. They just know that this thing does something good, and they're like, "Hey, I made something. It does something good. Like it helps me.
Cool. Come buy.
Yeah, like buy this." And then someone else sees it and says, "You know what that thing really does? What it really does is it solves this." And then so they go to all. I know people who have this problem. I know who will actually pay money for this solution, and then so they just copy it and they become the successful hit. Like, that's the danger. I think Salesforce managed to completely avoid that by just being like, no, we know what our product is going to solve, and like that's it. So I would agree. I think they're in a very strong position. We don't use Salesforce where I work, but like Salesforce is like the thing that most of our clients use, if not like all of them, for their CRM purposes, I guess.
Mm-hmm. Well, thanks for humoring me. Always fun to see what people call ESG or not ESG. Final thoughts for the week before we wrap this up.
Do you guys think crypto stays up, or are you guys going to sell it right now? We still have 2 weeks before to bottom out this month. And I mean, like, we were just talking about how yesterday, apparently, we were at 8%, you were saying? We're at 5 today. That's my question. That's what I was wondering. What are you guys going to do with your crypto? Are you guys going to hold on to it, or are you going to sell it?
I think I hold it for now. Ask me next week, and my answer may be different, though.
I'm honestly so bad at timing these things because I always hold. So, like, I'll probably say hold again, like I usually do, but then I'll probably be wrong. Yeah.
I'm leaning towards hold right now, too. I'm not really sure where it's going out right now, because, like, kind of just blew through the 40s. Got up to, now we're just chilling, like, just below 50. I'm kind of curious.
Well, that's the test. I think that the test for me is, can it sustain anything above 50?
Mm-hmm.
Then you think it's truly back once it...
Well, back is a relative term.
But like...
I think it's the most significant obstacle it has to deal with right now.
It is, like, psychologically, 50,000 is an important number in people's minds, right? For buying and selling. I feel like that actually has something to do with it.
I mean, there's all kinds of stuff that... if you're actually like in the community of crypto enthusiasts, there's all kinds of reasonings for why it is or isn't important. But for me, I want to see it. I want to see it sustain something above 50. Because that to me, from where it is now, seems like enough of a stretch that if buyers are willing to keep it there, it shows me that there's enough confidence to propel it at least a little further.
Mm.
But on that note, since we're all holding, I guess we'll ask the same question next week and see how much the market has either emboldened our opinion or shattered our confidence. But
yes.
Until that point in time, good luck. Keep an eye on it. And we'll see where we're at next week. Later, guys.
Sounds good. Take care, guys.
See you guys.